Hello, everyone, and welcome to another episode of the Daily Gwei Drive-Thru. I'm your host, Anthony Sassano, and I'm here today with Eric Conner to talk about all things Ethereum. Hey, Eric, how you going?
Anthony, doing pretty well. How about yourself?
Good, good. Just enjoying, I guess, like flashbacks to 2019 this week on crypto Twitter with a bit of drama, a bit of the kind of rehashed conversations popping up again. You know, we have this kind of joke, you and I, that during the depths of the bear market is when Ethereum people like to discuss and debate the most esoteric things that don't really matter. And when there's like a few green candles and we go into like a early stage bull market, these discussions tend to cease. And one of those, I guess, this week was around the Uniswap front end implementing a fee. So there is I think 0.15% fee on trades of the most popular pairs on Uniswap, which I think accounts for 90% of the volume on the Uniswap front end there. You know, it's funny. I was wondering why they only did like those kind of tokens. I think it's because one, I guess like it covers most of the tokens, but two, it's also like maybe a securities concern for them, where if they were taking fees on like tokens that could be considered securities were being traded, they might get in trouble. I don't know. That was just something weird to me. But I guess you had an interesting take about kind of fees within DeFi and crypto generally, where you kind of drew a comparison to TradFi, where fees are basically a race to the bottom, right? And in crypto, I think that people can get away with the higher fees right now just because crypto is so small and there's not that much competition for these things or good competition, and it hasn't kind of permeated out into the I guess TradFi world. So yeah, I'd love to get your thoughts on kind of the Uniswap fee implementation on just the front end. It should be clear for people, and like where you think fees go generally in crypto.
Yeah, I mean, I think we could probably talk about this for a while. I'm assuming we're going to, right? And this is like a really interesting one, and especially for me personally, like going way back to like when I got involved in Ethereum and thought about launching a DEX myself. I Our theory at the time was if you put any fee in, whether protocol fee, front end fee, or even token, we thought people would fork it out. Now, this was back in like 2013 before, a lot was learned and there's like moats around branding and trust and things like that. And people didn't really like perfectly envision how the DeFi landscape would take place. I find it kind of interesting that we've gotten to this place where now we have like tokens and fees. So I guess I'll step back a little bit in the Uniswap conversation, right? And I think if we go back all the way to like early 2018, all these protocols are kind of being launched. There's really no fees, there's no tokens. It's kind of just this like smaller open source community that has this idea of DeFi, which is like, hey, can we do finance better? And people are just kind of like vibing and writing code like that. I'm like making it a little more simpler than it is, right? But this is like at least how I saw it. I think a lot of people in the smaller Ethereum community at the time saw it. And a lot of cool protocols were launched. Obviously, Maker was kind of one of the first, Augur, Gnosis, if you want to call them DeFi, around like prediction markets. And then like Uniswap came around and Aave and, all these compound, did I say compound? But anyways, like they came around, right? And it was like, okay, this is cool, but how can we do finance like a little bit better? And of course, you had like the trustlessness, and then you kind of had these automated market makers and automated lending and borrowing protocols, and it was all really neat. And then all of a sudden, like the bull market took off, and everyone got like a little bit greedy, myself included. I'm not gonna like act like I'm like out of this, right? And token farming started happening, tokens started happening, and it's like, okay, well, how do we? And to be fair, like you and I have talked for years about like we think a lot of apps and protocols have just shoehorned tokens in, right? And like I've also been very critical of token governance on the Ethereum side. I know you have as well. But we kind of went through this boom where it's like, okay, well, there's tokens, and like clearly this is just like stocks, and these are great protocols, and they should be worth like trillions of dollars someday. And like we went through that mania, right? And then we kind of cooled off. And I think we should still, as a community, be reassessing: are these tokens worth it? Like, a lot of this was, I'll just be blunt, a lot of token launches were for like early investors in VC to exit their liquidity. And like, yes, it did give the average Joe like an option to buy a share in Uniswap. And, stocks are kind of the same way. Stocks are a governance vote. I would say stocks are a little, well, if you have a dividend stock, that's very different. And there are some tokens that are doing like dividend revenue sharing stuff. Stocks, like in the company, like in the traditional finance world, companies get bought way more often, and then that you do get cashed out on your stock at like the sellout price, right? Which we will get there probably in DeFi and Ethereum in general, but we haven't really seen like a token buyback. I think we've seen like one or two, something like that. So I don't want to quite go to the Uniswap front end fee quite yet, because Uniswap, if you go back and look at their blog post for their Uni launch, and I think it was in 2018, I believe, their big pitch to the token at that time, if you read the post, I'm not just making this up, they hint at this in protocol fee switch a lot, right? And now Uniswap gives a fee to LPs, like liquidity providers, which I think is necessary because you're not going to provide liquidity on Uniswap without earning some kind of money, right? And they were talking about this, well, we could also, our token holders could enable this fee switch, which would go into like a pot, and then all of the token holders would kind of have like a say at this pot, right? And I remember at the time, people were like so into this because they were like, well, if Uniswap's doing like billions of dollars in volume, and people were putting out threads like calculating like, you know, how much money could be made and their P to E ratio and all this stuff. And that is what Uniswap put out there. It's in their blog post. They hyped it up. You know, it was intentional. They put it in their code base. It's all there. And there's been this whole kind of like debate in Uniswap governance. Should they enable this? Will the SEC come after them for enabling this? Is it putting token holders or Uniswap at risk? And, you know, let's just be honest, VCs and, you know, early Uniswap investors own the Uniswap vote, right? This is a typical kind of governance theater type situation. And recently, as far as I think 5 months ago, maybe 6 months ago, the latest fee switch on a protocol level was shot down. So Uniswap still takes 0% fee. The token holder protocol itself takes 0% fee from each trade. So I think I want to put that baseline there, right? And like, am I right to that point? Like, is that how you felt about uni token governance to this point?
Yeah, I mean, I think if we're talking about kind of the token and then the fee on the front end and how those kind of play with each other, it's a clashing of incentives, right? As you kind of mentioned, you have these VCs, you have the team, but the VCs and the team also, they have the equity in Uniswap Labs or whatever their actual business name is, right? And this equity is not translated into the token, right? The token holders do not get access to any of this. They don't get access to any of the money made by Uniswap Labs from this fee and whatever other money they make. They only get access to the token, right? And if you buy the token and it goes up and you sell, you make money, obviously. But right now, as you said, and probably for a very long time, that fee switch is not turned on, which means that the Uni token, as it exists today, does not have any value accrual besides some governance value and the hope that the fee switch will eventually be turned on. But because of that clash of incentives, there's no real reason or incentive for the Uniswap team or Uniswap Labs team and the VCs to vote in favor of this and open themselves up to possible legal repercussions when they can just make money off of the equity, right? They can just make money off of the fees going to them instead of kind of introducing this kind of fee switch thing, which then the fees go to every Uni token holder. And yeah, maybe their kind of like Uni, the value of Uni goes up because of that. But who knows like how much Uni they have left? Maybe they've sold a lot of it already, right? Because some of these VCs are up a crap ton on their Uni because they got in super early. Like for example, Paradigm was the first investor in Uniswap. They gave Uniswap, I think, $1 million in 2019. I think the valuation maybe was 10 million. Now, Uni's worth a lot more than that, right? So Uni fully diluted value is what, like a few billion or something like that. So if you work out how much tokens they would have gotten, I don't know the terms of the deal, but I'm sure it was a pretty good return for them. That's 1,000x or something, and like on $1 million, right? They just made $1 billion from Uniswap or from the Uni token. And then, as I said, I'm not entirely certain on what the deal structure is, and they did invest in follow-on rounds, but they also have access to the equity, so they also get a share of whatever the fee is making now on the front end. So really, from that perspective, the incentive isn't there for these VCs. And team, I don't know, it's maybe different as well, because like the team really, if you're talking about the team, it's really just the higher ups that make these decisions. It's not going to be the regular employees. It's going to be Hayden and the other co-founders or the other kind of like higher ups that are there. I'm not sure exactly who those are, but it's going to be them and the big VC holders, right? And as you said, they shoot down every attempt that there is to turn on the fee switch. Now, whether they're doing this because of regulatory concerns or they're doing this because they feel like it's going to make Uniswap less competitive because now there's a fee that's not going to the LPs, but it's going to the token holders, which means people will be less inclined to LP with Uniswap and might go elsewhere. I understand those concerns, but at the same time, like the governance is a sham because of that, right? The community has no say here. And it really, I mean, that's not true of just Uniswap, by the way. That's true of pretty much like all of these governance tokens. There are very, very few people who hold the majority of them, even the older protocols. Like Rune from Maker, for example, pretty much de facto owns the Maker protocol because he has enough MKR tokens to do whatever he wants with it. So I think that to this point, decentralized governance with tokens has completely failed in pretty much all the attempts that have been tried because it's not decentralized. It concentrates power incredibly badly, and it also skews the incentives, as I was just discussing about how that now there's a token and there's equity, and there's no incentive for the token to accrue value if you can just kind of make it up in equity. Because at the end of the day, you could work out how much you would get from your uni bags in terms of like dividends if the fee switches were turned on. And then you, as a VC and as the team, and then you can work out how much you would get from this front end fee. And I'm sure this front end fee it probably drives more value. And also it only goes to equity holders. It's not shared with all the other uni holders. So they get a bigger slice of the pie. So I'm sure they did the math on this and thought that, well, this is the better way. And also from a regulatory perspective, I'm sure it's the better way as well. So yeah, I think that's the disappointment here. But I will be clear that I have absolutely no issue with Uniswap putting a fee on, or Uniswap Labs putting a fee on their own front end because they run it, right? They designed it, they pay all the infrastructure costs and everything it takes to run that. But it is a kick in the guts to the uni token holders because again, it's just showing that there is zero interest from the team and by extension the VCs to turn this fee switch on for the uni token holders. And as you said, it was kind of described in that blog post. It was kind of not directly promised, but it was kind of implied that this would happen. And it's been, I think that blog post came out in 2020 because Uni did their token as a result of Sushi Swap doing the vampire attack and stuff. So I think towards the mid to end of 2020, that's when it happened. So it's been 3 years. Right, been over 3 years now, and we're still nowhere close to that fee switch being turned on. And I think that's the main source of frustration for a lot of people over this.
Yeah, definitely. And I think, I mean, so I'll take the counter to you. I do have an issue with it because of them doing a token and then doing this. And also, like, there's this wording, right, where it's in the blog post, we're doing this for a sustainable Uniswap. And then Hayden tweets out a week ago, we're doing this for a sustainable Uniswap. Well, what happened to the millions of dollars you raised in the token? I mean, there's 7 billion fully diluted today. I mean, I think at the top of Uni, it had to be 50 billion probably at least because it's at $4 today. I think it hit 50 or something like that, maybe 10x from what it is now. And it's just, I don't know. I think I just have a bad taste in my mouth, and maybe this is just kind of everyone thought that like Uniswap was like the golden child for a while. It was like the first like kind of like pure DeFi smart contract. It was like, oh, this is just like a smart contract and it runs and there's no token, there's no fees. And then like you said, Sushi comes along and they react to that. They launch a token. I think the VCs get in their ears. The VCs get in their ears again to not turn on the fee switch. I think the VCs get in their ears again to turn on the UI front end fee switch. Now, I do sympathize a little bit with your point where the front end switch, yes, people can go around it, right? So like if they put it in the contracts, you can't really get around it. Someone could fork Uniswap and take it out. So like if I'm talking selfishly myself as a non-uni holder and as like a trader that knows how to get around the front end, I would prefer the front end switch because I can just get around it and know how to do that. And I'm not paying it on the protocol level. As like a purist like Ethereum DeFi fan, like everything feels a little gross to me. And that's just my honest opinion. I'm just going to put it out there. Right. And I don't know where this ends is one of my issues. Like I'm sure over the next few months, a lot of other protocols are going to throw out front end fees. And it's one thing to say like, yeah, people can get around it. Cause like a lot of these people say, oh yeah, you can just get around it. Right. Well, like 95% of people don't know how to do that. And I think I'm starting to wonder, like, where are we really better than CeFi now when it comes to fees? Like in like my E-Trade account, my Fidelity account, whatever, I can pretty much do any stock trade for between like $0 and $10. And this percentage thing is starting to get to me. So now in DeFi, we're setting like percentage fees. And say you do like $100,000 trade, you're charged like a large percentage. Whereas like on CeFi now, that's like free pretty much, or like $10. I'm not loving this trend of like percentage fees. And I think this is, of course, like a still early discovery phase for DeFi, right? And like you said, I tweeted out, I think eventually DeFi will be a race to the bottom because of the open source nature, and because I think people think like DeFi is going to change every day for the next 50 years, and it's not. Like the finance is kind of boring. I think we're going to get like Lindy contracts and contracts everybody just is like, oh, this is great. Like look at Uniswap V2. It's still getting used like crazy. And that thing's been out there for years, right? And there's no fee on that contract. And I mean, maybe now on the front end, but like you get what I mean. Like I don't think eventually we'll just have these contracts we trust. And if there are fees in them, there are fees in the front end, they'll be forked out, they'll be removed, they'll be worked around. But I don't like this trend of right now where it's like, oh, hey, by the way, we dumped our token on retail. And I'm not talking to just Uniswap. This is like pretty much every DeFi protocol. Hey, we made multi-millions on our token and dumped it on retail. We still have like 60%, but governance is working. So we're going to throw a fee in the front end too. Like, I'm just not vibing with that. And I think it's a pretty bad look. At the same time, I think in 10 years from now, it'll all be gone. But there's this weird like bear market thing right now happening that I'm just not a fan of.
Yeah, I think when you look at kind of TradFi and how they do it, it's more similar to CowSwap than it is to Uniswap, because with CowSwap, they offer gasless trades, right? And kind of like gasless approvals now. Now, that doesn't mean you're not paying a gas fee. What it means is that it's built into the order flow, right? The market makers that are kind of matching you in the background are paying that. They're baking it into what the trade is, right? It's baked into the trade. Now I think this is the same for TradFi, where they have things like payment for order flow, where they're just baking this all in, and MEV is very prevalent within TradFi as well. It's just that we don't see it because it's all permissioned and closed source. There's no kind of ether scan for TradFi that's going to show you what's happening there. And I think that's probably the better comparison there. And I agree with you, over the long term, it's probably just going to be a race to zero fees, but it'll just be baked into that kind of order flow. And I personally don't use Uniswap's front end and haven't in quite a while. I tend to use CowSwap because of that, because of the fact that I know that it's not, free gas, for example. I know that it's baked into the price, but in saying that, CowSwap still gives me a better price than Uniswap does as an aggregator, as a way to aggregate liquidity from basically anywhere and have people fight in the background for that liquidity, and also protect me from MEV, or from most MEV, especially sandwich attacks, which are pretty brutal, right? Taken to their logical conclusion there. So I think that's probably what it's gonna look like. But as you said, like most people will just use the things like the Uniswap front end because that is like the branding and marketing that has been built up over time, where people are like, oh, I know the Uniswap front end, I know what this looks like, I'm going to go there and use it. Same with MetaMask swap feature. MetaMask swap charges 0.8% on a trade, and they still do a ton of volume because you can actually see the fee revenue going to their address on Etherscan, and they make a crap ton of money from this. Now, okay, who is using MetaMask to swap with that fee? I'll tell you who. One, it's airdrop farmers thinking that they're probably going to get some kind of MetaMask airdrop, right? But they're not going to be doing like high volume kind of stuff because it's just going to eat into their money. And then there's going to be the noobs who don't know any better at all. They see swap, they're like, oh, I can buy this degen token that on through MetaMask. I'm going to do it like that, right? And I know MetaMask, it's my wallet, and that's all well and good. And then they just use that, and they don't even notice the 0.8% fee, because for them it's like a calculus of, who cares if it's 0.8% fee? I'm going to make like a 10x on this. That's the kind of calculus that people run in their heads. And that's another part of this I don't think we've discussed yet, is that when you think about the calculus that people do, kind of like an expected value thing when it comes to trades, like in crypto, your expected value from buying a token is at minimum probably a 10x as a regular user, right? I'm not talking about traders and things like that. I'm talking about like a regular kind of retail investor who puts their money into this stuff. All they want to do is make a lot of money, right? They want to make the 10x, the 100x, and that's the calculus that they do. So for them, they're not fee sensitive at all, right? They don't give a shit about a 0.8% fee if they expect to make a 10x. Now, whether they make a 10x or not is another thing entirely, but that's the expectation there. So I think in TradFi, there's there's much less of an expectation of that than there is in crypto. So that's probably why things are different there, especially for the larger players. Like TradFi is dominated by the institutions, right? It's not really dominated by retail players kind of trading stocks amongst each other. Whereas crypto is the opposite still. Crypto is predominantly retail, predominantly a lot of funds that act like retail, to be honest, that don't act like professional outfits, because a lot of the time they're unregulated and they don't care about their customer funds, as we saw last year with the blow up of things like 3RS Capital and Celsius and other places where they didn't give a shit that wasn't their money, right? I mean, FTX is obviously the perfect example here, but that's like the extreme example. But they didn't care. So I think that until crypto matures a lot to the point where it just looks like TradFi looks today, which it will, don't get me wrong, it definitely will, especially I guess like now I think we're starting the institutionalized phase of crypto finally with obviously the ETFs and stuff like that. I think that's what's going to kind of make a major change in crypto, because at the end of the day, like I'm even the same still at this point where I'm like, if I'm buying a token, I'm buying it because I expect it to go up a lot, right? I'm not buying it to make like a 10% and then sell it, because I'm not a trader. So for me, even the fees wouldn't really affect me, but I know better, right? So for me, I'm not going to go to MetaMask and do a swap at a 0.8% fee. I'm going to go to CowSwap because I know I'm going to get a better price and it's going to be better for me over the long run as well. But for a lot of new people who don't know any better, they are not going to care at all. And I think that's why we see that. And they also, because the crypto is inherently kind of like self-custodial when you do that sort of stuff. Like if you want to trade some new token on chain, you can't do that through Coinbase. You can't do that through Binance or anything, right? Like you have to actually go on chain. And then what do most people do? They have a MetaMask wallet. So they go onto MetaMask and then they use MetaMask to swap. And Uniswap has their own wallet now as well, which I'm sure they're loving, because that's going to put more order flow through that wallet, which means they'll take a fee on that as well, of course. So when you look at it holistically, I think there's like different market segments and different people who are sensitive to different kind of fees. But I agree with you, over the long term probably being like 10 plus years at this point, to be honest, it takes longer than people think it does. It's going to look pretty much exactly like TradFi, I believe.
Yeah, for sure. And I think also TradFi goes back to what you were saying, like so I used CowSwap for pretty much any decent trade as well. And like all of this is just gets kind of like hidden in the order flow. And that happens in TradFi too. It's like, oh, E-Trade says they have no fees, but you're probably getting a worse price on your stock because they're letting people like front run you. You're like, so it all like is kind of a game, like at the end of the day. I think the biggest issue that I'm kind of seeing in DeFi is, well, I think my biggest issue, I think if we go back like 3 years and all the DeFi protocols said, hey, you know what, we're just going to throw like a fee in our front end and not do a token, I'd be like, oh, cool, whatever. Yeah, that's neat. My issue is the token and the fee, because now you're really admitting that the token nothing, right? And I
guess on that point as well, like the token doesn't actually get any of the fee revenue. That's the key point here, right?
Exactly. And that's the most frustrating part, right? Like, I don't think any of the tokens, well, there's a couple like tokens out there that are doing unique things. I don't want to comment on like every token in the ecosystem, but most of the key DeFi protocols that also have like a fee underneath are not passing that revenue to the token holders. And it goes back to what you said. There's this whole like equity ownership and token ownership where like investors and VCs have this equity ownership. And if you're pulling in a fee on a front end, like Uniswap's going to, you're passing that on to equity owners. And, you know, those equity owners also got a huge payday on tokens. So it just feels dirty. And I think I truly still believe in like one of our famous taglines in our previous podcast lives has always been like a multi-decade play, right? I truly think DeFi will eventually kind of rid of this hype and greed cycle and will turn into this kind of like more core open source, like let's do a better financial system community, almost like not like Linux, but like kind of in a way, like back to like OG Ethereum style, because I think this is all going to be flushed out. I think people are going to realize for most tokens, it's kind of useless, and I don't think they'll recover, and they'll go like they never go to actual zero, right? But they just won't recover. And I think that's a misnomer. A lot of people have, oh yeah, my token will recover with everything. It usually is not probably going to, or it usually doesn't. It's probably not going to happen that way. Unless some of these protocols wake up and say, hey, yeah, let's pass some of this fee on to our token. And I think one of the other things I'm a little like disappointed about, I would say is, and I don't want to just pick on Uniswap, I really don't, but they're just like front and center right now, is these protocols charging fees. And then you see like debates on Twitter about like public goods and like the DeFi founders, and there's multiple cases of this in the last 3 or 4 years, like, oh yeah, like the protocol teams and public goods are way underfunded. Well, where are we've talked about this a lot in the past, and this is not the first time we brought this up. Where's the donation to public goods by these large teams? So like, where's Uniswap's multi-million-dollar donation to protocol teams? I personally haven't seen it. Maybe I missed it. I don't know. But at least at a minimum, maybe as a community, let's get the talk going about, if you are going to charge a fee on your front end and you're just passing this on to equity holders, maybe let's take like 1% of that and pass it on to something like Protocol Guild, donate it to some kind of quadratic funding thing through Gitcoin or whatever it might be. And I think at least that would put a better taste in people's mouth. I mean, I think if we could go back and just delete tokens and say, hey, yeah, we're going to take a little bit on the front end, but we're going to pass 10% of this to protocol funding as well. I mean, I think we'd be in a pretty good spot. I don't think anybody would really be complaining right now.
Yeah. And on that note, I actually just brought up the dashboard on my screen here of the Protocol Guild and the donors. So the Uniswap DAO has donated to the Protocol Guild before, and it was actually a pretty substantial sum. It was around, I think, $2.7 million at the time. Now it's $2 million, obviously, because Uni went down. So they have done that. And there's been a bunch of other communities that did it as well, like Arbitrum, 3.4 million at time of donation, Lido, 2.8 million. So it is happening with the Protocol Guild, which I think is obviously extremely positive. But I guess like at the same time, it's not like a standard yet, because I would love it to be a standard, right? And it's also done in like their native token, which is fine. But I mean, it should be more palatable to do it with your native token, since you just print it out of thin air basically, and then the market gives it a value. So you shouldn't really care too much about kind of like giving this away, so to speak. So I'm glad that that's happening there. And I think this discussion about public goods funding and this broader discussion actually kicks us into the next topic that we had slated for today, was I guess a topic that has been discussed to death in the old days being like 2019, 2020. But for newer people to the ecosystem, and or those who didn't follow along with these debates, they may be confused about something here. Now, what I'm talking about is with EIP 1559, the reason why the ETH is burned instead of sent to like public goods, or instead of sent to some address that funds public goods or the protocol development or anything like that. That's the main question people have. They're like, why are we burning the ETH instead of donating it? Well, let me put some numbers to this. The ETH currently, the amount of ETH that we've burned, the dollar value, is $10 billion, right? Since inception. So since August 2021, right? When August 5th, I think it was 2021, where 159 went live. So just over 2 years, $10 billion has been burnt, of ETH has been burnt. So that's $10 billion that could have gone to something else instead of being burned, right? Now, the reason, well, there's like a few reasons why this is actually the case, but I don't want to focus on the technical reasons. I want to focus on the social reasons, but I'll give the technical reasons. One, it actually, EIP 1559 doesn't work properly without this being burned, because it would basically mean that people could still use out of banned fee markets, which essentially would mean that they could bypass the mechanism altogether, which would just bring us back to the previous mechanism, which was shitty from a transaction fee kind of mechanism perspective. So that's the first technical reason. And there was another one out there as well that basically I'm forgetting off the top of my head right now. But the social
you're basically enshrining ETH at that protocol level.
Yeah, exactly.
Fees. Yeah,
exactly. And making sure people pay ETH as fees instead of something else out of band. Obviously to keep ETH as the core asset of the Ethereum network. But in terms of like donating it versus burning it, so I explained technically like why the burn has to happen. But in terms of a social thing of like donating it, I pose the question to the audience is like, okay, so there's $10 billion over the last 2 years that goes into a pot. Okay, who do you trust to manage that $10 billion, right? Who do you trust to distribute it? Who do you trust to make sure it's not raided? And also, just because you trust them doesn't mean you're going to agree with who they want to give the funds to, right? Because if you want an example of what it looks like when there's a large amount of funds being managed by a decentralized community, and I'm using kind of quotation marks there, look at DAO's treasuries today, right? Look at how they've been managed. A lot of them just get raided. A lot of them pay exorbitant exorbitant salaries to members who do basically nothing, right? And it's not just DAOs. This is actually true of like just organizations in general. I mean, I saw the other day that the VP of digital marketing at Parity, which develops Polkadot, was getting paid like $700,000 a year. I don't even hear about Polkadot at all. Like, where's this marketing that he's supposed to be doing, right? So, this doesn't just happen within DAOs, but could you imagine the amount of capture that would be attempted of that $10 billion pot? And keep in mind, this pot grows over time in perpetuity because it's the fees being burned in perpetuity, right? So like there's no way you can trust anyone to distribute those funds fairly. And fairly is a subjective term because what's fair to me may not be fair to you. Like for me, I'd love all that money to go to the protocol guild, right? But like, are we now overfunding the protocol devs? I mean, that's not a shit ton of money going to what, 150 people, $10 billion split among 150 people. I'm not sure that I mean, as much as I want to keep funding the protocol guild with as much money as possible, that is like when you really put the numbers to it, that is a lot of money. And then do we get into the kind of issue of dissuading core developers from even working because now they've got so much money they don't have to work anymore, right? So when you think of it like that, as I said, what's fair to me is not fair to someone else, which is not fair to someone else. So instead of giving these kind of like these fees to some pot that can be captured, that can send money to stupid things, that can send money to things that people don't disagree with, we just burn it because that is the only credibly neutral way to essentially deal with that. And also it has the byproduct of, in theory, and plays out over a longer period of time, bringing the value back to all ETH holders. So if you want exposure to that burn, you hold ETH. That's basically the calculus there. And then everyone has access to buying ETH. There is no one in the world that can't buy ETH today. Even if they only have a little bit of money, they can probably find somewhere to buy ETH, right? And I guess like that all comes down to if you've got money to buy ETH and if you can afford to buy ETH. But that is, I guess, separate to the discussion. It's more about making it so that anyone can get exposure to this and to the value that's kind of burned here, rather than it being up to like some high priest that would decide where all this money went. Because if you look at DAOs today, there's really only a handful of people per DAO that make the majority of the decisions out of a few different reasons. One, I mean, I wouldn't attribute maliciousness to most of it. I would say that one, it's a thing of most people don't have the time to invest into this, to vet things and stuff like that. And two, most people don't care about this sorts of stuff either, like treasury management, stuff like that. So yeah, that's kind of like the reasoning behind that. But it's funny because, as I said, we had these discussions extensively in 2019 and 2020, and it was like settled back then, and that's why 1559 has the burn. But people like to reframe it to FUD Ethereum, I think, from time to time, saying that, oh, we're just obsessed with ultrasound money. We're just obsessed with burning ETH, which I don't agree with, because MEV burn, which is a proposed solution, or I guess a proposed way to burn MEV in order to make the value go back to ETH, I'm actually like still on the fence about that. I'm not in favor of that. And that's because of the technical stuff, not because of the burn stuff. And honestly, I don't know if we should be burning MEV to begin with, and I'm still kind of working through that myself and learning all about it. But I personally wasn't just in favor of 1559 because it burned ETH. I was in favor of it because of the massive UX upgrade to Ethereum, which I guess, Eric, I'll stop rambling here and let you talk more about, because you were pretty heavily involved in 1559 over its life cycle. I mean, you were a co-author on the EIP, right? If I'm remembering correctly.
Yeah, correct. I could rant on this for 2 hours, but I know we don't have enough time. I think it's important. You opened the podcast by saying bear market vibes, and I think you just alluded to this debate we had in 2019. I think people need to first realize, like, this all comes down to issuing a block reward, right? And like every blockchain has a block reward that's paid out to miners, validators, whatever you have on your network. And that's what they get for creating a block, right? And Ethereum has created this overarching kind of theme of minimum viable issuance, right? And early on, Ethereum had a 5 ETH block reward. As a community, really reduced it to 3, then reduced it to 2. And now with like validating, it's a little bit more complex, but it's much lower than that at the end of the day. Because even when we had a 2 ETH block reward on a proof of work, we're at like 3.5-4% issuance, I think. And now every day we're hovering around like 0%, right? Now, like you said, the most important thing to realize about 1559, and like when I first started co-authoring it with Vitalik and a few others, we never talked about fee burn. And it has become like the discussion of 1559. And it was always like a mechanism, right? Like you said, it has to be there for 2 essential reasons. 1, to enshrine ETH on the base layer, and 2, to make sure miners cannot manipulate it if you're not burning the ETH being paid for the block reward, like they can create third party auctions, which is like the old. I don't want to get too technical, but it just has to be there, right? And so then the community, which rightfully so, I don't really mind it, kind of latched onto, oh, we're burning ETH, it's going to be great. Like as transactions go up and blah blah blah, we're going to burn a lot of ETH. That was never like until like the final spec was out and people realized it might go into the protocol. No one on the like design team talked about that, which is crazy. Like if you go and read the original blog post, it's not even there. So the fact that we would then even think about, oh, we should direct this to somebody else. No, it's all a technical reason, right? And it's all about this minimum viable issuance as well, because sure, we could say tomorrow, oh, let's increase the block reward by 10%, just pay it out to like a DAO. Like this is the exact same debate we had in the bear market back in 2018, 2019, when everything was underfunded, and the exact same debate. We're like, well, why doesn't part of the block reward go to, and then we're like, well, who does it go to? Just like you were saying, who? Can you imagine $10 billion? I mean, $10 billion, you're like, if you capture that DAO, you're one of the richest people in the entire world, right? Like that's an unbelievable amount of money to be managing. Like, I don't know who you would possibly put in charge of that. And so you get into this, you got to just think of the block reward as this pie. And it doesn't matter if part of it's getting burned for mechanism, part of it's going to validators. No matter what, it's just a block reward. And if you want to say, oh, we should take part of that and give it to public goods, okay, yes, but that's a whole different debate. You can't just say, oh, this shouldn't be burned, because now you're saying, well, a very large portion of every block reward is going to public goods, right? Like if you take all the burn amount, I mean, it's a huge percentage of every block that's been produced. And now we're like, wait, why did you even do that much? So it's this never-ending debate. And I think vehemently anybody involved in Ethereum should deny this ever on the protocol level, because I mean, I don't need to repeat your points, but there's no human mechanism alive that can like manage these funds. And we've seen just basic DAOs, like you said, be captured, do stupid things. I mean, I'll use like Nouns DAO, which was like, I was into Nouns DAO early on, and like all of a sudden they had like 22,000 ETH in the DAO, and like everyone's like, okay, what are we doing with this money? Like who's voting? And then like they fail to make the vote, and all of a sudden they were like buying commercials for like millions of dollars and people just don't coordinate well enough to manage this type of money, and this should never ever 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 be put on the protocol level of things. Go ahead.
Yeah, no, I mean, I totally agree with you. And I think it brings us to like the next point of discussion, which is the fact that there are existing mechanisms and new mechanisms coming online, or new things coming online, initiatives, I should say, that fund public goods. Obviously, Gitcoin has been around for a very long time, funded a lot of public goods, tens of millions of dollars, right? You have Protocol Guild now, which has the goal of actually getting to $1 billion eventually in there. And it currently has, I think, tens of millions of dollars in there. Yeah, their first goal was 10 million and they reached that. And then there are some other initiatives, but the key point here is that it's voluntary, right? It is not something that is forced upon anyone. It is voluntary contributions to wherever you want to contribute to them. There's not just one pot, there's many pots. So that is good for evading capture, right? Of any one kind of like pot being captured, because it has a lot of money in it, right? That's good for decentralization. It's good for distribution of funds, and it's good for letting people express themselves in various different ways. Do you want to just fund core devs? Okay, go fund the Protocol Guild. Do you want to fund the app teams and other things like that, or the other public goods on Ethereum? Go do that on Gitcoin. And then there's also Optimism doing their retroactive public goods funding with their token. Okay, anyone can submit a proposal, and then that proposal gets voted on by their badge holders, which are like community members. That's probably the closest thing to what it would look like for Ethereum, to be honest. And there's still a lot of issues with that. Like I looked at the last round, and there was a lot of money that went to things that I didn't personally agree with. And this is where you come to the kind of like subjectivity of this all again, right? But again, that's kind of a voluntary thing, right? It's Optimism voluntarily saying we're going to donate a bunch of these tokens to retroactive public goods funding, and that's fine as well. Another very interesting thing that has been talked about before but isn't implemented right now is, what if we had the clients themselves, so the validator clients themselves, what if they implemented a switch where you could say, okay, well, a portion of my block rewards or fees that I get could go to the client teams themselves. And obviously that would be opt-in and everything. So essentially what would happen is that you'd run like a Lighthouse client, for example, and you'd switch on the thing and say, okay, well, 10% of all the rewards that I get, I want them to automatically go to Sigma Prime, who builds the Lighthouse client. Now, that again is opt-in, and that again is just giving power back to the individual in order to donate to who they want to, rather than it all going into one big pot, like it would if the fee revenue that wasn't burned went to just this one big pot that was decided on by who, right? Would it be ETH holders? That wouldn't work, because then you would just have like the ETH whales dominating everything, and you kind of wouldn't want that to happen, right? And then would it be just respect the people within the Ethereum community? That's fine. Like I would maybe trust some of them, but as I said, it's not just about trust. It's about the fair distribution of this, and how the word fair is a subjective term, and it is also not it's not the same to everyone that it is to me. Like I know tons of people who want to fund things that I don't want to fund at all, that I completely disagree with should be funded, and people disagree with me on things that should be funded. So in that world, which is the world that we live in, is the reality that we live in, rather than creating massive pots of funds that could get easily captured, we have many, many different pots of funds for many, many different types of things, and people can donate to what they actually want to donate to, rather than having to decide as part of like a big collective. It's more of like small collectives, small groups here and there. And I think this even goes back to the point of like, outside of crypto, where people will say, well, they disagree with how their government spends money, right? Because they've got in the US, there's always huge debates over how the US spends money. Like, should they be spending money on foreign aid? Should they be doing domestic stuff? Should they be doing more military spending or social spending? It's the same thing. And the way we actually work around that is through democracy, but it's a very imperfect system. And Ethereum is not trying to be a democracy. Ethereum is not trying to be a traditional kind of nation state. It is itself can be considered like a digital nation, but it has its own rules. It has its own protocols, it has its own values. Its community has its own values and kind of things that it wants to see. So I think that what the key difference is that the way Ethereum does it is, as I said, very small kind of groups, very small pots of money here and there that people can voluntarily say where they want it to go to. And then on the nation state level, it's more of everyone gets taxed, and then you vote in a party, and then the party spends the money how they want to, essentially, right? And I mean, it's very messy from there, but you kind of like get the analogy there. So yeah, I think that should be like what we just talked about for the last 10, 15 minutes, should explain to people exactly why the fee revenue is burned, and also hopefully encourage people to go and donate to public goods themselves if they want to, and do that through wherever they want to, whether that's Gitcoin or on Optimism, getting involved with governance there, or doing the protocol guild stuff. Like, I'm very partial to the protocol guild, because I think the protocol developers and researchers are basically the beating heart of Ethereum, and without them, the roadmap for the next whatever it is, 10 years is not going to get delivered, because at the end of the day, we need people to research and build this stuff. So I've made a lot of donations, personal donations, to the protocol guild over time, and you and I both have made a lot of donations to Gitcoin over time as well. So yeah, if there is people out there who want to donate, there are many different ways to do it. It doesn't require some kind of like huge pot of money going from the fees to be captured. I feel like, as you said, that would be the worst possible thing that we could do, and it would very much degrade Ethereum's credible neutrality as a network, I think.
Yeah, I mean, we're in a much better place now than 3 years ago, right? So I think there's better options out there, and I think the entire ecosystem's in a better place. I mean, we're literally like, is this thing going to survive, right? I don't think we'll ever get back there, especially with ETH at almost 1,600 or whatever it is. I just don't think we'll ever return there. So at least. And the EF's got a ton of money, which of course we don't rely on the EF, but at the end of the day, they've got multi-millions of dollars, right? So I think just having
And that's the thing a lot of people miss as well, I think, with like ETH value accrual, is that the EF is solely funded by the ETH that they have. And obviously they want to be able to sell that ETH at a higher price so that they can get more fiat in, so they can pay various different things. So yeah, the higher the ETH price goes, the better it is for Ethereum generally, just from that one thing. And there's so many other reasons, but I think, yeah, that one thing, like the EF, for every dollar I think ETH goes up, the EF gets a lot of money, like millions of dollars, I think. So when you look at it like that, yeah, I think people should understand why we want ETH to go up, right?
Yeah, I always love like, oh, the EF's selling. Well, yeah, I mean, what do we just hoping the EF holds till $1 million ETH? And like, oh yeah, they have to sell to like fund this stuff, right? So I just that always cracks me up. But yeah, I mean, long story short, I think we're in a better place than we have been. But I totally agree. Go out there, donate to some of the guilds if you can, and I would still encourage some of these DeFi protocols that are making money, everybody out there to keep donating. And maybe I misspoke earlier. Uniswap has donated 2 million, but let's do better, right? Your protocol is worth 7 billion. You have a token, you got a fee. Let's all like, I like what you said. Let's commit like a revenue stream, right? I haven't seen that yet. It's like, oh, once a year, let's donate like 1 million. Let's commit like, oh yeah, we're gonna give 10% of our front end fee because we've made a lot of money off Ethereum and we need it to keep going to, stay alive. So
TradFi actually has us beat on that because Van Eck committed to donating 10% of their proceeds from their
you're
futures
right.
product to the protocol guild.
How
Like,
did
why
that
is
happen?
TradFi beating us on this? Like, come on, guys. So yeah, I agree with you. There should be that constant kind of stream there from different projects, different protocols. Maybe not just like the tokens that they have, but as you said, like based on the revenue that the project actually makes, right? So they can donate a portion of that there instead of the governance tokens, which, yeah, I mean, is a whole different thing. They should do both, but yeah, it would be nice to see the revenue portion, definitely. All right. Well, yeah, I guess that's it for today, Eric. That should make for an interesting episode for people. I think, as I said, there are a bunch of new people who may not be aware of the historical context here around the stuff that we spoke about today. So I'm hoping that we help them understand that. But yeah, I guess we'll be back in a couple of weeks from now for another one of these.